The events that have unfolded in the financial markets over the past year have been truly unprecedented. Traditionally, raising interest rates was expected to trigger a stock market crash. An inverted yield curve was seen as a signal of an impending recession, and changes in liquidity were thought to significantly impact risk assets. However, the reality has defied these expectations. Despite reaching multi-decade highs, interest rates have not caused the markets to stumble. The yield curve has inverted to historic levels, yet a recession hasn't materialized. And while liquidity has decreased, it hasn't had the anticipated effect on risk assets. In this video, we will delve into the remarkable insights of one individual who accurately predicted these market movements years in advance: Russell Napier. Russell Napier is a renowned financial historian, author, academic, and macro analyst. He first gained recognition for accurately forecasting the Asian financial crisis in the 1990s. Since then, many of his predictions have come to fruition. Let's highlight some of Russell Napier's prescient forecasts. Inflation. In 2021, as inflation began to rise, Russell Napier predicted that it would not be transitory but rather continue to increase. His prediction proved correct when U.S. inflation nearly hit 10% in 2022, driven by rising service prices. Interest rates. While most experts expected the Federal Reserve to raise interest rates in response to inflation, Russell Napier was one of the few who believed that the stock market would continue to rally and the economy would expand despite rate hikes. This prediction aligns with the current situation where rates are above 5%. Yet a recession is not forecasted. Foreign markets. Russell recommended that investors look at foreign markets, particularly Japan, as attractive options. As predicted, the Nikkei index reached its highest price in decades, driven by foreign inflows. Chinese stocks. Despite being cheap, Russell warned against investing in Chinese stocks due to escalating geopolitical tensions between China and the U.S. liquidity. Russell's most remarkable prediction was that financial liquidity, historically closely correlated with risk assets like tech stocks and cryptocurrencies, would have minimal impact on asset prices. This forecast was validated as global liquidity declined, yet tech stocks and crypto continued to rally. Russell Napier's accurate predictions can be attributed to his deep expertise in financial history and his macro framework, which he outlined in his book, The Asian Financial Crisis: Birth of the Age of Debt. His framework revolves around the Asian financial crisis of 1997, where Asian countries accumulated large foreign currency reserves to protect their currencies from IMF influence. They invested these reserves in government debt, causing a long-term decline in interest rates worldwide. However, this age of debt began to unravel around 2012 as geopolitical tensions escalated and countries like China reduced their acquisition of U.S. government debt. Russell Napier foresees an era of financial repression where governments will directly or indirectly control monetary policy. They will employ various forms of financial repression, such as forcing financial institutions to purchase longer-term government debt to maintain artificially low interest rates amidst rising inflation. This could lead to a misallocation of capital, stagflation, and potentially a decline in productivity. To protect your portfolio in this environment, Russell Napier suggests several strategies. Gold. In an inflationary environment with manipulated interest rates, gold can be a reliable hedge. Value stocks. Invest in value stocks, especially in countries not at risk of financial repression. Tech stocks. Consider selected tech stocks, particularly those benefiting from government spending. Cryptocurrency. Bitcoin and Ethereum can serve as hedges, with Bitcoin likened to digital gold and Ethereum to digital oil. Stablecoins. Stablecoins backed by government debt may also provide a hedge. Foreign investments. Explore countries with low combined public and private debt to GDP ratios, as they may experience significant economic growth. U.S. dollar. Holding the U.S. dollar could be beneficial, as it may be among the last Western currencies to be affected by financial repression. While Russell Napier's predictions may take years to fully materialize, staying informed and diversifying your portfolio can help you navigate the evolving financial landscape. Keep in mind that these strategies are not financial advice, and it's essential to conduct thorough research and consider your unique financial situation and goals when making investment decisions. Please remember to subscribe, like, and comment for more content.